So let's talk about J&J. This is a stock I don't look at much, but decided to do a video on J&J today. So big picture, if you just kind of follow the white line, this is the 13 simple monthly moving average. It's basing, which means price has been range bound. Then it starts moving higher, which means that price is in an uptrend. It levels off and starts turning down, which means that price hit a top, and now price is in a downtrend. However, price finds itself at a level where in the past it served as resistance and served as support, not once but twice. However, last month we did get a candle close, which opens the door for more downside risk. Now this is the weekly chart, and if I was just to trace the highs and lows, you can see how price is in a downtrend. But even if you didn't trace the highs and lows, pivot highs and lows, you can see your moving averages are pointing down. All right, daily chart. My eyes gravitate to this level here, drop in price, 3 basic candles, and then drop out. And that was good for at least a reaction. Again, you're in a downtrend, so ideally you want to go with the trend. You can see back in March we had a depth cross. That's where the 50 crosses over and below the 200-day. So that's bearish. Now these are the recent lows. I want to trace that across. Makes sense why we got a reaction, right? We had a gap higher, although this is not in the ideal location. But if you get past, start seeing candle closes above 143, kind of opens the door for more downside risk. All right, so J&J is an iconic name in healthcare with a history that goes back to the 1800s. But in recent years, it has faced some considerable challenges, namely due to lawsuits and the legal battles it faces with respect to its talc products. On April 16th, J&J reported its latest results, which demonstrated continued growth. Revenue of $21.4 billion for the first 3 months of the year represented a modest 2% increase. The healthcare giant slightly boosted its outlook for the year, however, projecting that sales from operations will grow 60% at the midpoint versus an earlier forecast of 5.5. One reason investors have come to love J&J stock is that it's a dividend king. This month, the company announced yet another rate hike, rising its dividend payment by 4.2%. This marks 62% consecutive years of dividend increases. Now, J&J stock hasn't been doing terribly well. It currently trades at a multiple of 20 times its trailing earnings, which is well below the healthcare average of 32. So kind of signifying that it's undervalued. Based on the price to earnings growth ratio of 0.9, which factors in analysts' expectations of future growth over the next 5 years, the stock looks cheap. Anything less than a 1 considers that it's a good value buy. However, the chart suggests, if we see more candle closes on the monthly chart below this band, and if you get below $143, expect more downside risk. Thanks for watching. Subscribe. Please like the video.